Are tariffs about to crash the stock market? Here's what you need to know. Ever feel like the stock market is a roller coaster you can't get off? Well, buckle up, because things are about to get even wilder. We're diving deep into the world of tariffs and how they could trigger a market crash. Think of a tariff as a tax on imported goods. It's like adding a surcharge to products coming from other countries. The idea is to make imported goods more expensive, encouraging people to buy local. Imagine China makes a car for $25,000, while an American car costs $50,000. A tariff on the Chinese car could level the playing field. This makes the American car more appealing and boosts local manufacturing. Here's the kicker. The tariff isn't paid by the other country. It's paid by the company importing the goods into the US. So if Ford imports parts for their F-150, they pay the tariff, not the country where the parts were made. This can lead to higher prices on almost everything you buy. Clothing, electronics, even housing materials could become more expensive. That extra cost has to come from somewhere, and it's usually you, the consumer. Tariffs are supposed to protect US companies and create jobs. They also aim to increase government revenue and improve trade negotiations. But the reality is often much more complicated. For the past 50 years, the US has had a trade deficit. We buy more from other countries than they buy from us. Tariffs were seen as a way to fix this imbalance, but they're not always calculated fairly. The real danger is other countries retaliating with their own tariffs. China, Canada, and Europe are already threatening countermeasures. This could quickly escalate into a full-blown trade war. This results in higher prices for consumers and less economic growth. People buy less when things are more expensive. US companies already cut 275,000 jobs in March, the highest since May 2020. Tariffs have a long and often disastrous history. In the 1800s, high tariffs protected US manufacturing but hurt agriculture. This tension contributed to the Civil War. The Smoot-Hawley Tariff Act of 1930 worsened the Great Depression. Other countries retaliated, world trade collapsed, and everyone suffered. We're now at even higher tariff levels than those eras. Sometimes tariffs just don't add up. We help build Taiwan's economy and buy $116 billion in goods, but they only buy $42 billion from us. Malaysia's main export is palm oil, which we don't even produce, yet we've slapped a tariff on them. Consider this. Mexico makes a hammer for $2 and sells it in the US for $4. A US-made hammer costs $6. A 300% tariff on the Mexican hammer makes it cost $8. Now the US can sell theirs for $8 too, but the consumer pays twice as much. Tariffs only generated $80 billion in 2022, just 2% of US revenue. That's enough to fund the government for only 15 days. Personal income taxes raise 27 times more. Tariffs aren't a sustainable revenue source. Some countries are simply better suited to make certain products. Avocados in Mexico and coffee near the equator are prime examples. Broad tariffs historically backfire, raising prices and hurting jobs. Tariffs can be used as a negotiation tactic, but if other countries refuse to budge, things can get ugly fast. That's why the S&P 500 dropped 5% in one day, wiping out an entire year of growth. Focus on what you can control: living below your means, maintaining a steady income, and investing for the long term. Markets often bounce back after the worst days. Don't try to time the market, buy more. Missing the 10 best days in the market can dramatically reduce your returns. That's why the average investor underperforms. Even a dead person investing tends to outperform because they don't panic sell. The market is volatile, and tariffs add another layer of uncertainty. But remember, long-term investing is key. Don't panic, stay informed, and focus on your financial goals. Now, here's what I want you to do. Smash the like button if you found this video helpful, and subscribe for more financial insights. Share this video with your friends and family so they can stay informed too. And let me know in the comments what you think about tariffs and how they'll impact your investments. I'll do my best to reply to as many as I can. Finally, check out the link in the description for our free budgeting app beta test. Thanks for watching, and until next time.